There is no news for the day. We've already checked that. So you can see for the daily, we are clearly in an uptrend. We're above the EMAs, we're above the zero line, or MACD's rolled off the zero line and pushing up. We're starting to get some distance between those BBs. Got a bit of distance before we get to that opposite Bollinger Band. And we had that nice W pivot in the price action. So a good look for the continuation to the upside. Cool. So 28,657 over here, telling a similar story, okay? So we're above the EMAs, we're above the zero line. Price did hang out just a little bit, and we kind of made this grindy pullback back to that smaller EMA on the 28,657. We often have this look like this grind back. It's almost like we're putting in lower highs and lower lows as we continue to get back, as the MACDs continue to grind back towards that zero line, almost so you can kind of reset, and then we're good for the push up again. Now today is contract rollover. So for those of you that don't know, that's just the day in which people will go from the previous contract. So currently, as of today, we rolled over to the 12/24 contract. So before that, we were on the 09/24 contract. And so contract rollover some days can be a bit iffy because there's a lot of traders that are still on the old contract and a lot of traders are on the new contract. Particularly if you are trading a prop firm, there may be rules stipulating that you are trading on the contract which has the most amount of volume being traded. If you go over to new, go down to market analyzer, it pops up like this. It'll be empty. Right click, add instrument, and then it will say 09/24. And then if you go add instrument again, if the 12/24 is not there because you haven't chosen it already on your chart, you just go on down here to futures. And if it's still not there, then you can just go down to search, future here, type in ES, just double click that, and then that will add the most recent contract right into here. So then we just have to add a filter. So we're going to go to columns, and then it's daily volume is what you want to select. Double click. You see it's added down here. Then we can apply. Press OK. And then you can see the daily volume is over here. We're going to take a look at what the difference is. But if we look at here, so what do we have? We've got strength in the BBs here on the 10,946 outside. Really weak pullback to the Bollinger, bottom Bollinger Band. Entry charts. We have that retracement divergence from this pivot to this pivot with a little price hangout, and it was a decent long opportunity. But then if we take a look at the 09/24, and you can see price action looks pretty similar, right? We're still between those EMAs, started to break out of the Bollinger Bands. So between the bands in here, if you look at this sharp pullback in here, right? We didn't have that on the other workspace or the other contract. Also here, it's a bit of a quicker pullback on the 233, but the 1597 with that BB almost snapping back with this big old bar in here would not have had me thinking about the long. Pay attention here to that BB snapping back. And we'll go to, and then look how it is in here. And also over here, we're outside of those Bollinger Bands, right? So that gives you more confidence of the continuation. On the 9/24, we're actually inside of those Bollinger Bands. A less favorable look of the trade idea working out. Then we go back to this one, outside the Bollinger Bands, pulling back weak to the bottom band. Retracement divergence here on the 233. So a much nicer looking signal. And then what's happening here, you're struggling to push down, struggling to roll over. And then on the flip side, it's turned to retracement divergence to the upside. So as you fail to push down, BBs have failed to roll. We're still bluing up. And then we're starting to roll to the upside. So now you're expecting a bit of a pullback. Price pulls back deeper to that 610. And now by this stage, these BBs have started to pop up on the 1597. So you might still be thinking, okay, you know, we could be rolling from the 610. It's probably just a deeper pullback. you're at the top Bollinger Band, you're still purple and down here, right? So you might be thinking, okay, this might be it, but what else is happening? We get that push down and literally no follow through in the 1597 MACDs. And it's done the same thing again. It's turned to retracement divergence back to the upside. So then we break out those bands, pushing up strong and chuck. This is what I was talking to you about a couple of weeks back when we were talking about certain trade opportunities. When you are picking up the pace like this and the BBs are strong here, that's when you can take those smaller pullbacks in the 233. I've tried to get better at them recently. It can feel a bit uncomfortable at times, but when they line up like this and you have an area of previous resistance that turns into support, that can really help as well, right? And often you'll find we use that opposite Bollinger Band on the 233 as an area to roll. Now, we can't always wait for the turning of the BBs when we have this much strength in the BBs on the 1597 chart. We have to anticipate the continuation, right? So we're paying attention to the strength in the actual 1597 bars, the hard closes towards the end of the bars. This bit of a flag reversal beforehand might have thrown you off, in all fairness, but the BBs are still smoking to the upside. And then we get that little bit of a pullback, pulling back to the lower Bollinger Band, and then we get these little reversal bars on the 233 at previous resistance turn support. So that would have been a decent entry opportunity. Pivots, 1597, retracement divergence, clearly, right? But on the 233, you might be thinking, oh, we're at the area. Maybe this could continue to the upside. So what tells us that the strength on the 233 was also dying out? Well, as always, divergences, right? Divergences between these pivots. So you got that true divergence there. Then as we started to break out of those Bollinger Bands on the 1597, so you're starting to get that, it's go time moment. You get this outside roll on the 1597 right in here. Generally, the outside roll on the 1597 is usually paired with a slow and roll on the 233. Now, obviously, it's not always going to be that picturesque slow and roll, but rolling inside the Bollinger Bands is what usually happens. So how can you figure out if you are late to the move? That's a great question. So with being late to the move, you'll be able to get away with it more if the market is strong, right? That's the only main time you should really be thinking about whether you should be getting in late. And then on the pullback to the EMAs, for example, if it looks strong, then I'm thinking about, okay, where's the divergence? So let's see example back here. So what time is that? Okay, perfect example, right? So we're in a clear bullish sentiment, right? Strong to the upside. Strong EMAs. This is the earliest opportunity, or this is how I work it out. BBs are strong to the downside, coming into the EMAs, which are strong, overrunning the zero line, right? Generally speaking, the first opportunity that will present itself will be the divergence opportunity, assuming that you want to be early in the next move that's going to happen to go with the overall. So you get the initial divergence. So that's the original move, harder to catch, because if I wanted to take this opportunity, I would want to pair that with divergence on the 233 as well. Let's just go back. Boom. Okay, so what do we have in there? Divergence on the 233 as well. And then if you miss that, because that one could be hard to take, this opportunity in here. So that would be the entry, right? But if you miss that, and that's like the original entry, after the divergence entry, you usually get a retracement divergence entry. And in this case, it's ultimate retracement divergence in here, which is often just a normal kind of rolling look in the 233. Doesn't always have to be paired with retracement divergence on the 233. After that, then I'm assessing, okay, is the higher time frame now going to turn and change the momentum, or is it just going to lead to a retracement divergence on the higher time frame BBs? Is this just going to be a small push to the upside, which is going to give us retracement divergence in these BBs? And in that case, then I'm going to be looking for continuation to the downside. So with regards to catching a falling knife, when we have strength on the 28,657 like this, yeah, like just absolutely killing it to the downside, generally speaking, you don't want to step in the way of that. That's like the basic way of not catching the falling knife. This is a prime time to take those strength continuation trades, right? When you are strong and outside on the 28,657, and then you're also strong and outside on the 10,946. So if you are, in Lindsay's words, smoking to the downside here, strong and outside on the 28,657, technically you are still between the Bollinger Bands here, so the strength hasn't been confirmed. But say right in here, hello Tim, mate. So then 10,946, let's look at that, outside the Bollinger Bands. So this is a great look for strength continuation, right? If you are strong here on the 28,657, outside of those bands, and you're outside of the bands on the 10,946, I would heavily suggest you do not take a long. You want to see at least a divergence in the 10,946 before even considering it. Strong and outside here, 10,946 outside roll. So with this outside roll, as I said before, it would mean on the 1597, it should, doesn't always have to be, it's often just a rolling like that. Doesn't have to have a retracement divergence before it, it's just pulling into an area, boom, it turns. So you pair it like that. Let's go back to what I was saying, strong and down here. I'm saying you're going to want to see divergence before you even want to consider the long. And then what do we have over here? 10,946, you get your divergence. And it still goes down, right? But right there, you had some opportunity for a long, coming into an area of support as well. That's key. BB's turning white and staying white for a while on the larger charts tend to confuse me. Yeah, so it's not something which happens often, but it does happen, especially in really strong markets. They can just go white and they can stay white. So you can't rely on them solely by itself. That's why you want to combine them with those divergences. The probability is not on your favor. When the 28,657 in particular is strong like this, and the 10,946 is strong, go with it. Don't fight it. Go with it. Because you can get away with the smaller pullbacks. You can get away with chasing it a little bit. So Chuck says, how can you tell when the market is going sideways and to just stand back? So two things, right? That's the beauty of trading, either in the evening session or giving the market, 10, 20 minutes just to work itself out. Because when you can get really sucked into the speed of the market at the start and you think, because of how fast it's moving, you want to jump in on the strength and you're not really assessing the environment. If you look back on your charts, generally, in between EMAs, you'll often get a lot of chop zones, and also price hanging out before the EMAs. When there's a disagreement between the MACDs and the price, it can just be a bit confusing. But if you look back, the area between EMAs, a lot of the time, I remember when Jason told me this, it's just because you've got to bear in mind, you've got support turned into resistance, support below. So you're in that compression between two areas that want to push you in different directions. Here you can see price is pushing down, and then the MACDs are just creating divergences and price starts to hang out, right? So you're paying attention to the MACDs, but you're also paying attention to the market structure. Early signs of sideways movement are the EMAs. You'll notice you'll be flat on EMAs, or if they're just like going up and down and chopping each other. So this kind of look here on the 1597. On the 233, you're going to see it a lot quicker, right? Like this. This is going to be your first indication. Will be the EMAs start to go flat like this, and they get violated. So this right here, you might be thinking, okay, it's just an overrun. Around this point here on this crossover, now you're assessing, okay, where are we? Where's the price? Okay, we're between the EMAs. We could be going sideways. This could be an overrun. What's happening on the 1597? Oh, okay, we're getting divergences. We're leading higher. So potentially the strength to the downside is getting weaker. But this is your indication. Your visual indication is that choppy, no respect. Reversal bar on the 10,946 as well. We are still blue and outside on the Bollinger Band. So this is going to be interesting. pulling back into an area for continuation on the 1597. Right now, I wouldn't be thinking about the long or the short. So now the BBs have the potential to slow down, right? We have the cluster here, clustering together. And we had the divergence here on the 1597, and now we've had the pullback on here. So now we could be outside rolling to the downside. With the outside roll to the downside, the 233 look would then just be a slow and roll, right? So I'm thinking now, okay, what's more likely to play out? We've got these BBs blue and outside. We could either outside roll to the upside, and if we did that, it would mean these BBs here need to slow and roll to the upside. So that could be happening right now. And in the same breath, you've also got to think, okay, well, if this push up is weak, and then we create retracement divergence, and we start to roll to the downside, that could be enough to slow down these BBs a bit more. But we've really got to keep in mind the higher time frame. And bias has been to the upside. We are outside the Bollinger Bands, but can't be ignoring this retracement divergence here. With the weakness here, for me to want to take the short and think it's going to be a decent move, I would like to see some retracement divergence, a newly formed retracement divergence. Yeah, we're leading lower, much lower here, but the way we've pulled back into the EMAs and kind of reset, I would much prefer having a recent retracement divergence here in order for us to anticipate a deeper pullback. So you've also got to bear in mind we've got 9,000 ticks left, right? So we've got a good few BBs that can play out. So this outside roll could still play out to the downside here. If this push like rolls over here and we push down, we could get the outside rolling look here, which could then pull us back into that zero line, and we could be fairly weak there. And if we're weak there and we create retracement divergence over here, that could be suffice to then be in tune to go with the 10946 with the outside roll back to the upside. So it might have a bit of a pop down here onto that zero line. Then that new BB opens up and it's almost kind of reset. So then we could go with that retracement divergence on the 233, with the slow and roll on the 1597, which would also support the narrative for the look of an ultimate retracement divergence on the 10946 to go to the upside. I would love for this bar to close towards the bottom, because then as it closes towards the bottom, you're going to have an outside rolling look, and then the next BB can then easily pop to the upside. So this is the kind of look I was hoping for, but I wanted it further down here. So it looks like the outside roll is playing out now, or attempting to, with that slow and roll. In hindsight now, something I wasn't really paying attention to was how close this bar actually pulled to the 1597 EMA. 91, yeah, within one or two ticks of it. So if you were paying more attention, as I was not paying attention, then that would have been a fairly valid spot to take it. I was mainly paying attention to the overrun here, but we did pull back very close to that 1597 EMA. Chuck has said, at this point, is it a good opportunity to get into a long trade, like if I missed the initial entry? So similar to what we said about earlier, I personally wouldn't, because you've got to think about what we have now in the BBs. Essentially, if you took the trade here, you know, it could work out. But the way I perceive this now is we've had this push up and now we've got divergence or potential for divergence, right? We've just had a reversal bar, flag reversal. So I'm thinking there's now the potential of a pullback. If we had the strength behind it on the 1597, so like something where we have strength up here and then we get that weak pullback, and then you actually get that retracement divergence, right? Whereas here it just kind of pushed up and you'd be thinking, okay, should I take the long? It's pulled back to the 233 EMA. It's a place for continuation. If, however, we were outside of the bands here and we were going to the upside, or we were in a grindy environment, then it's more, you know, acceptable to take it because we're anticipating that continuation because of the environment that's been persisting for, you know, that whole session, for example. No one's got any more questions then. I'll wrap things up, guys. If you have anything, just message us, Discord or support. And yeah, highlights will be up tomorrow if you guys want to rewatch everything. Thank you all for being here. Really do appreciate it. And yeah, happy trading for the rest of the week, guys. All the best. Bye-bye.